はい。皆さん、こんにちは。ジョーです。今日はですね、ターンファイナンスという固定金利の、プラットフォームですね。固定金利にて、貸し借りがですね、できるというプラットフォームなんですけれども、今日は CEO、そして、ファウンダーのですね、ティオンさんに来ていただいているんですが、この固定金利のマーケットっていうのは、既存金融で、本当にものすごい規模の市場になっているんですけれども、まだまだクリプトでは開発をされていないので、今日はそういったところに取り組んでいるDion さんにですね、お話をお伺いをしていきたいかなと思っております。Okay, Dion, back to you. Thank you so much for your time. And I am
Thanks.
absolutely excited about asking many questions and, showcasing your product. Can we start from your intro, and after that, we're going to go deeper in your product?
Yeah, happy to start. My background actually come from traditional finance and Wall Street. Started my career at DE Shaw, a large hedge fund in New York. Spent a couple of years there, but so moved down to Washington, D.C. and joined the Federal Reserve Board of Governors. Was there under Chairman Bernanke from '07 to '09. So during the financial crisis, it was definitely an interesting time to be there. You definitely learn a lot. But it was a 2-year program. And as that program wrapped up, decided to get a law degree, given my exposure in Washington, D.C. I graduated from Harvard Law School in 2012, but didn't want to practice law. So decided to come back to New York and start a career trading U.S. government bonds, first on the sell side at a large bank, and then on the buy side at a large hedge fund, capital investment management. Fast
Thank
forward a
you.
few years, actually started a small family office. And as that part of that journey, got involved in DeFi, and that's how I kind of ended up in the crypto space.
It's quite a pretty impressive career. Um, you've been doing like hedge fund asset management and, getting a law degree. It feels like you have a pretty good life in the TradFi or traditional, like businesses. But why DeFi or the crypto was so attractive for you?
Yeah, I mean, if you look at traditional finance, it's very mature, extremely deep, mature markets, but growth is pretty limited. And to be honest, a lot of the infrastructure that underlies traditional finance is very, very old. Some things dating back to the 1960s, 1970s, there's a lot of inefficiencies. So when I discovered DeFi, it just seemed like this is the wave of the future. I don't know how long it'll take for us to get there, but it just doesn't seem like it makes any sense other than to have everything move on to crypto-like rails, when the market is ready for that. So there's much more growth in DeFi, and there's also much more room for creativity and building new things. So I think for me personally is to be able to be part of this movement, to see finance move on chain, and be part of the foundation of building out something new. So that's what really excites me about DeFi.
Sounds great. And also, when it comes to DeFi, there are a lot of segments, components that you can think of. But why fixed term lending or borrowing you chose?
Yeah, so as I mentioned, when I first got into DeFi, started advising various projects. One of those projects was serving as a DAO treasury manager. And in that role, job was to manage short-term liquidity, relatively safe, conservative yields. And it's great. You started off, yields were double digits. This is back in, early 2022. But really quickly, you saw interest rates start to fall. And they also, they move around, fluctuate, quite erratically. So coming from a TradFi background, I realized, look, this is very unpredictable. As a borrower, I have no idea what I'm going to pay. What's my interest rate? I can't predict that. And similarly, as a lender, I have no idea if I come in, deposit for 3 months, what am I going to earn? You really can't predict. DeFi lending markets are so volatile. And coming from a TradFi background, especially in the fixed income space, trading US government bonds, I know that fixed income is the largest financial market in TradFi, second only to currencies. And so, I feel like for DeFi to really mature and grow into that long-term vision, somebody needs to come and solve fixed rate lending and borrowing on chain. And so given my background and my experience, I thought, I think I know how to make this happen.
That's great. We kind of already touched upon your product, but can you briefly explain about your product, Term Finance?
Yeah, I think basically very simple. It's like Aave. These are over collateralized loans backed by blue chip collateral like Bitcoin, Ethereum. The key difference is instead of a variable or floating rate on term, you get a fixed interest rate for a fixed period of time. And that's it. Like Aave, collateral prices move. It's tracked by an oracle. And if the price of collateral falls below a certain level, then your position gets liquidated to protect the lenders. And as we've seen in the last bear market, this model has been very robust, virtually no bad debt in the major lending protocols, despite even a 90% peak to trough drawdown in the price of Bitcoin and Ethereum in the last bear market. But yeah, fixed rates is really our key focus.
Sounds great. Thank you. And also the fixed lending or borrowing protocol or the product has been, I think, largely popular for the traditional institutions in the Web2 space. How is it in crypto? Or, slowly adapting from the institutional side also, or?
Yeah, I think crypto and fixed rates faces pretty unique challenges. So in traditional markets, your end user, your average mom and pop retail very rarely invest directly into fixed rates. They have intermediaries like asset managers who manage large portfolios of fixed rates and handle all of the operations of redeeming, reinvesting, managing the portfolio duration. All of that's handled and abstracted away from the investor. DeFi is very similar. All of the popular products in DeFi are deposit and walk away. But with fixed rate lending, it takes a little bit more deliberate action from the part of the users. You have to be comfortable with the term of the loan. You have to know what interest rate you want to lend and borrow at. It's a little bit more involved. So the way that we decided to tackle this is instead of focusing first on retail users, we focused first on how do we create a market with the institutional power users in the space. And especially in protocols like Aave even, you'll see that the top 1% of users on Aave account for 50% of TVL. So we felt like this is the market to focus on initially. So over the past, I think, year and a half, we focused on institutional users and found good product market fit. We've cleared over 250 million in loans through our auction process over the past year and a half.
Does that mean you see a lot of institutional demand, or you mainly focus on now like whales, or could be some protocol that have a lot of USDC or like Ether or the main current users?
Yeah, the main current users are definitely focused on institutions and whales that are active in the DeFi space. I think over time, especially this year, seeing that the regulatory environment in the United States is starting to loosen up, we're starting to see a lot of CeFi and traditional finance institutional players also coming to enter the space. But that may take another 6 months or so. But we do see this market growing over time.
After the Trump administration, has started, I hear a lot of interest from traditional finance guys, and also they're planning to, I heard, to do stuff in DeFi space, or at least they try to see how. Have you heard of like such stuff, or have you actually spoken with institutions?
Yeah, actually, we noticed the same thing. So there are a lot of CeFi, TradFi institutions that we spoke to last year, and the response is, no, I'm sorry, we can't touch DeFi. Just not something in our playbook. reaching out to him again in the last couple of months, the tone has completely changed. So like, we have a mandate. Our goal is to be involved in DeFi within 6 months. We're seeing other large institutions build out and hire teams who have smart contract engineers, and they're actively monitoring DeFi lending protocols, including term finance. So that's a good sign that they're doing their homework. And hopefully, if things work out, they will soon be deploying capital into DeFi as well.
Thank you. And I feel like the auction process might be a little bit difficult for the retail users. But is there any products that they can actually, like easily participate, or any like products that they can, try out first? Or
Yeah, for sure. So, we understand that the auction is not meant to be for everyone. So for people who don't have time to monitor the auctions each week, we have two other ways or two other entry points to interact with term finance. The first one, we call it the Blue Sheets Earn product. This is very simple. When you go to that website, you'll see a list of different loans that you can participate in. You'll be able to see what the maturity date is, how many days left until the loan matures, as well as the fixed interest rate as which you can lend, and the available supply to lend at that interest rate. Under the hood, what's happening is simply the lender who succeeded in winning the auction turns around and lists it for sale in the blue sheets, making it available for people to come and participate in that loan at their own convenience, anytime, 24/7. The second product is even, I'd say, maybe easier, which is the Vaults product. So the Vault product is curated by well-known, well-respected Vault curators in the DeFi ecosystem. So these are asset managers in the DeFi space who help evaluate the risk of lending against various collateral types, and they help participate in the auctions on behalf of the users. The best part of depositing in the vaults is that there's no minimum to the amount you can deposit, and that all of the gas fees associated with managing, redeeming, and reinvesting a fixed rate portfolio is paid for by the curators. So it's probably the most gas efficient way to participate on Term.
thank you. And I think the Blue Sheet, the product, is it just to provide USDC, or do you have to like do something else?
Yeah, you can either lend USDC. There's also opportunities to lend ETH. So you just have to click and choose what kind of token you want to lend and see what opportunities are available. In a single click, very easy to participate.
Thank you. What are the most popular products that you see at this moment, or it's been on Tern?
Yeah, we're very surprised when we first launched the Blue Sheets. It didn't take long for us to see over 1,000 users within the first month. And so we saw that actually was a big unlock, because there are a lot of users who wanted to participate in the community who didn't understand or have time to participate in the auctions, and the Blue Sheets gave them the opportunity to do that. There's still some work involved, though, because you have to redeem your principal plus interest at maturity and then reinvest in the new loan. So there's still a little bit of management involved. So when we launched the vaults about a month ago, we saw participation there increase even more. So last month we had over 3,600 users, unique users. So that was really exciting to see that these products are really speaking to a big part of our community.
Thank you. And can we go into the development or growth strategy from here?
Yeah, for sure. So, looking forward, our biggest expansion will be focusing on deploying onto different L2s. So still in the air, exactly which ones, but we're looking into Base, we're looking into BNB. There are a lot of options for expansion onto new chains. A second key growth strategy for Tern is focusing on expanding the vaults. So the curators that we've onboarded, they become partners to the protocol, and they also help find liquidity and supply across the DeFi ecosystem and bring it onto the Tern protocol. So, can't name any names, but we're talking to some very large liquidity providers that we're hoping to onboard into the Tern ecosystem in the very near future. So, we'll have more information about that, as that gets closer to completion. And then the third thing I would say is we are going to be focusing on a new update to the Tern protocol. So one of the constraints for smaller players in getting involved on the borrowing side of Tern is the ability to do automated looping. So in Tern, you borrow, you have to come back and do it multiple times before you can get on full leverage. So we're working on ways to allow instant single-click looping on Tern, and I think that will really increase the borrow demand and also further bootstrap the borrower side of our two-sided market.
I see. And I feel like the fixed-term lending or term finance needs a little bit of, I think, user education, in terms of, how to use and what this is. And I think this concept is somewhat new to many users. How have you been working on such thing, or just focusing on different clients who have such a knowledge, or what are the approaches to acquire your users?
Yeah, we really do want people to learn about the auction. We don't expect that to be the primary way that people interact. Think about TradFi, US government bonds, Japanese government bonds, all the European government bonds are issued in an auction. And almost everybody, either through their pension fund or 401k, has exposure to government bonds, even though they have no idea how these auctions work. Only a small handful of banks, primary dealers, participate in these auctions and then distribute those bonds to the rest of the market. So it's not necessary, I think, for everybody to be an expert and a user of these auctions, but they are open, it's permissionless, and we have been incentivizing through our points program users to engage and learn how these auctions work. And once you do it once or twice, you'll find it's actually quite easy, but hard to explain. But once you go through it a couple times, it becomes second nature. So what we were surprised by is that in the last month, we started to see hundreds of users come in and start participating in the auction, small size. For us, it's not meaningful in terms of the volume, but it's great to see the community is learning how these auctions work. And hopefully over time, the DeFi community gets more and more familiar with this mechanism.
And when it comes to institutional adoption for this project, I think the KYC might be sometimes required for them to go further on. What are you going to do this? Or how, are you going to implement the KYC entirely, or how do they give more chance or room to participate in this product?
Yeah, no, I think KYC is definitely easy to implement from a technical perspective. Already on Base, for example, Coinbase has put out an oracle, and you can easily check on-chain whether an address has been KYC'd through Coinbase. And that's very easy to integrate into a smart contract. The primary reason we haven't done that is most of the users who we speak to in the US, that isn't the only blocker. So, last year, there's so many different concerns that even if you did KYC, it wasn't going to move them over into becoming a user. But yeah, as soon as we get to a point where a user says, the last thing you need to do, implement KYC, we could probably implement that in very short notice. So it's on our radar. And when that becomes the last blocker, I'm pretty sure we can solve it quickly.
And you said you spoke with the, institutions, or you've heard of, them getting interested in DeFi. But what do you think about this fixed lending protocol? You think they are using this type of product as they use, this in Web2 H1 type of, management space, or Why people are interested in like fixed time lending? I guess it's been quite a volatile, but the interest rate of in crypto has been quite a good. But is it because the rates are coming down, or because of the volatility, or are they interested in do the arbitrage, or what are the reasons?
Yeah, so I think there are pros and cons. Even in TradFi, you have floating rate markets and you have fixed rate markets, and they coexist. And within the secured lending space, if you look across all different assets, you'll find in TradFi it's about 40% floating, 60% fixed. So there's always space for both. And I'm not saying that one is strictly better than the other, but it depends on your use case. And so, when is fixed rate better than floating rate? I think that's for cases where you have a need for liquidity for a longer period of time, and you want to have certainty as far as what kind of yield you're earning or what your cost to borrow is. Because, when you're building a business, you need to know what is your revenue and what are your costs. And if your costs are unknown, you can plan for a short period of time, but it's very hard to plan for a medium or longer term. So really it just comes down to the types of users and what their use case is. But, if we extrapolate from traditional finance, 40% floating, 60% fixed, I believe in the long run, DeFi will also converge to a similar kind of market dynamic.
Thank you. And this is not a financial advice, but the current economic environment has been like drastically changing, and now people are expecting the rate cuts. You think it's going to happen, and then I think if it's going to happen, the fixed term lending has, I think, quite a good positioning, I believe, because interest rate in crypto has been, like I said, quite high, but now we're going to see the rates shrinking. People, I think, want to hedge, or want to know what they're really getting, instead of like shrinking the rates and unexpectedly low rates they're receiving. But what do you think about those macro environments?
Yeah, I know it's really tricky because immediately after the election, everything was super bullish, Q4, Santa Claus rally, and we had a little follow through into the new year. But as soon as, the new administration started, acting in office, it's introduced a lot of uncertainty, a lot of trade war, tariffs, and markets don't like uncertainty, right? A lot of people were heavily leveraged, and it's okay to leverage when you have steady markets. But when markets are moving like this, you're going to get washed out. Everybody's forced to pull back on leverage. Pulling back on leverage causes asset prices to fall. And so, that's what we're seeing right now. We're seeing deleveraging and correction in token price due to excess volatility in the markets. Like you mentioned, the silver lining to all of this uncertainty, especially the tariffs, trade wars, and firing hundreds of thousands of workers in the US government, is that gives the Federal Reserve cover to start cutting interest rates. And, at least historically speaking, cutting interest rates have been great for crypto assets. What is interesting that you see like gold is like up all-time highs. I would expect Bitcoin to be higher, but if you look back longer term, I know like 85 from 100K is like a big down, but if you pull back big picture, Bitcoin is still, all in all manner of speaking, quite high. So I'm still bullish in the market. And I think at some point when a lot of this initial uncertainty starts to become more stabilized and the Fed starts cutting for the second half of the year, I'm bullish that the market will have a comeback. With regard to rates and DeFi rates, one thing I would note is very interesting. Historically, interest rates are countercyclical. When the economy is doing poorly, Fed funds go lower. When the economy is doing well, interest rates go up. In DeFi, it's the opposite. When the Fed cuts interest rates, crypto goes up, everybody wants to leverage, DeFi rates go up while TradFi rates are going down, and they go in opposite directions. So yeah, as they cut rates, I think rates will start to rise and there'll be more demand, there'll be more business. And I think that's going to be good for crypto asset markets and it's going to be great for lending markets as well.
Thank you. It's very insightful. I think the time is like quickly running up, but is there anything you wanna tell the audience about your product or development or anything? Any messages?
Yeah, I would like to just share kind of like what makes me really excited about Tern. Most of the major primitives on chain have already been solved. DEXs, various types of DEXs for trading. You have various perp swap markets like Hyperliquid, like GMX. You have variable rate lending markets like Aave. Fixed rate lending is really the last true financial primitive left to be solved or conquered in DeFi. And so that's what makes us really excited. We are kind of in a unique vertical here. And the leader and only real like scalable protocol in the space. So that makes us excited and I hope you guys come and learn more about Tern.
So one more quick question. Why do you think people haven't built much in this space, this fixed term lending borrowing? I think this is like very, very important. And also in the future, this is going to be huge for sure. But you think not enough players in terms of users, or users not sophisticated enough yet, or what's your take?
I think it was a strategic issue. So there were a couple protocols who had tried doing fixed rate. Yield protocol and notional finance were the earliest protocols to do so. But the problem was their mechanism. So they try to use liquidity pools. The problem with liquidity pools is one, it's very capital intensive. You need to put 50-50 stablecoin fixed rate tokens on both sides. And the stablecoin side generated no fees. And you got to remember, fixed rate loans do not have high trading volume. It's not a meme coin. So transaction fees on these pools were close to zero. So as an LP, the average return was only 0.5% a year. So it was not sustainable to support these liquidity pools. The second problem was that you needed so much capital to support very little liquidity. So with 20 million LP pool, you can maybe support $500,000 loan before interest rates would move by a significant amount. So when you talk to a whale user, they need to borrow 2, 3, 4 million at a time. It's not a usable product for them. There's too much slippage. And so transaction volumes are low, capital costs were high, and returns were not sufficient. So I think that model of trying to support instant liquidity was the wrong strategy. So we went all the way the other direction. We said we're going to focus on the whales. We're not going to worry at all about secondary markets, about instant liquidity. We're going to focus on just building once a week auctions to clear borrowers and lenders. And I think that's what you need to do for new kind of nascent, slower markets like this. And a lot of people don't realize this, but the first 100 years of the New York Stock Exchange, the market was just one auction every day at 3 p.m. It was only over time as the market grew and matured and trading volume started to increase that they changed into a continuous order book model that everyone is familiar with now. So, what you learn from that is that new markets, you start with something simple like an auction. You get all of the parties together at a single point in time, clear the market, and then you can worry about secondary markets over time as the market grows into that. So I think the key difference is our approach. We didn't try to solve secondary markets. It's a hard problem. And the market's just doesn't need that yet. One analogy I like to draw is Ethereum gas is so cheap now. You have so many L1s doing 5 million TPS, but we don't need 5 million TPS. So it's like we're okay with what we have now. And similarly, yes, we can do continuous order books, make it really fancy, but let's keep it simple. If the market demands it, we'll be sure to adapt to those needs. So yeah, I think that's been the reason we've been successful, is just keeping it as simple as possible, but no more.
Okay, makes sense. Thank you so much for your time, Dion, today. I'm very excited about the development of your product and also institutional coming into DeFi crypto. And I'm very, very sure that this market is going to be like unbelievably grow so fast once they're in.
Awesome. Thank you, Joe. Thanks for having me.
Thank you so much, Dion.